Welcome to the 32nd installment in Trading Strategy Guide's Trading Education Series. Today we're going to talk all about indicators. Stay right there. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. Today we're going to talk about the next element of technical analysis, how to use indicators. You know, if you use the right technical indicators, they can add a new dimension to understanding how the price moves. It's well known that many traders, especially novice traders, use technical indicators as their primary tool in analyzing the price movement. These technical indicators are used to support your price chart analysis. Most Forex trading platforms typically come with a default set of the most popular technical indicators. Keep in mind, though, there's always a hidden danger that you need to be aware of. We call it analysis paralysis. You need to be careful not to fall into the trap of using too many technical indicators that ultimately can affect your ability to properly analyze the market price. So what are technical indicators? Technical indicators are tools used in the technical analysis process to forecast future price movements. A technical indicator uses a rigorous mathematical formula based on historical prices and/or volume and displays the results in the form of a visual representation, either overlaid on top of the price or at the bottom of your chart window. Most technical indicators fall into one of three categories as follows. Leading technical indicators, which can include the parabolic SAR, the RSI, and the stochastic. Lagging technical indicators, which is typically demonstrated by moving averages, and confirming technical indicators, on balance volume, for example. A leading technical indicator gives early warnings and trade signals of where the price is going to move, so it can determine in which direction to trade before the new trend has even started. You know, this does sound too good to be true, and you're right if you're skeptical. If leading indicators are able to signal trades in advance, before the trend has even started, then we all would be extremely rich by now. That's just not the case, is it? The downside is that leading indicators are well known for their many false signals. This means that a lot of the time they will just totally lead you in the wrong direction. In this example, we have the Euro USD, with the RSI indicator showing overbought conditions in the market. Despite the RSI overbought reading, the Euro USD continues to rally because the prevailing and dominant trend was still up. A novice trader probably would have sold once the RSI entered overbought territory, which would have caused him to take a loss on this one. Leading technical indicators are not perfect, but if they are correctly used for their strength and in the context of a trend framework, great things can be accomplished. A lagging indicator, as its name suggests, is delayed from the current market price. Usually the lag is caused by using bigger price data inputs in their calculation. But a lagging indicator can be extremely helpful in gauging the market trend. The whole idea of using a lagging indicator for trend determination is that they remove a lot of the market noise that is inherent in the price and gives you a much better idea of the trend. But the downside is that a lagging indicator will only alert you about a trend after the trend has started and moved on quite a bit. Often that means you'll be late to the party, and of course the later you enter in the direction of the trend, the less profit margin will be available to you. In this case, by using only a lagging indicator to trade, you miss a good part of the potential profit. The classic moving average crossover system is a good example of how lagging indicators signal the shift in market sentiment after the new trend has started. One other thing to keep in mind is that most technical indicators are lagging in nature. Lastly, the confirming technical indicators can be extremely useful to validate your price analysis. As its name suggests, confirming indicators are only used to confirm that your reading of the price action is correct. One of the most popular confirming indicators is the on-balance volume, OBV. Using and interpreting the OBV readings is pretty simple. The aggressiveness of buyers and sellers is what drives the trend, so the volume should increase when the market moves in the prevailing trend. In this example, if for whatever reason you would conclude that the uptrend will reverse, then using the OBV indicator would have confirmed your analysis. The uptrend was lacking momentum as buyers were not buying this uptrend, as indicated by the OBV indicator. At the same time, all technical indicators can also be divided by their functionality and applicability as follows. Trend indicators, moving averages, MACD, parabolic SAR. Momentum indicators, RSI, stochastic, CCI, Williams, %R. Volatility indicators, Bollinger Bands, envelopes, ATR. And volume indicators, OBV, and Chaikin money flow. Understanding the differences and the similarities between the three types of technical indicators can help you better read the information they provide and then decide how to trade. For example, if you were looking at a 200-day moving average, what you're going to be plotting on your chart is a moving point that looks at the last 200 closing prices and then plots the average price. This way you can eliminate a lot of the noise that is inherent in your price chart, and it gives you a much simpler view of what's going on in the market. A moving average is really an easy way to identify and provide a little bit of definition to the trend. This should give you the answer as to whether you're in an uptrend or a downtrend and how solid that trend is. Because a moving average can gauge the trend direction, they are also called a trending indicator. The slope of the moving average and the current price with respect to that moving average will indicate the trend direction. The momentum indicators can help us understand how healthy and secure the trend is. A momentum indicator will typically be displayed at the bottom of your chart, and many of them come in the form of some kind of oscillator. Most oscillators will have upper and lower barriers that will typically signal overbought and oversold conditions in the market. So far, we've only discussed the simplest ways to apply technical indicators. The reason why technical indicators have become increasingly popular is that they offer an easy visual representation of the price. Technical indicators can be extremely useful if you keep it simple, but you'll run into a problem if it gets too complicated. Certain technical indicators can be a great help to read the price action, and what's more important, it can help you forecast future price movement. However, before venturing too far into the world of technical indicators, you have to remember that the price still is ultimately the final word on what's going on behind the scenes. Each indicator has its own strength. Remember to experiment with and test everything before you put real money on the line. And that covers this week's discussion of indicators. Next week, we'll wrap our discussion of technical analysis when we talk about another of my favorite subjects, chart patterns. Let's take a quick look at the Dream Trades. Dream Trades is a service from Trading Strategy Guides. Just a quick overview, the Dream Trades app shows you selected stock issues that meet the Dream Trades criteria. The stocks are selected and ranked by their trade volume and other fundamentals, and also by the price with respect to the 50, 150, and 200-day simple moving averages. The trade suggestions are divided between bullish and bearish signals. One of our prior Dream Trades was Garmin Limited, pushed almost up here to the 20% profit level, didn't quite make it. A trailing stop is currently 110.91. which is the 10% profit level. If it pushes back up to the 121 level here, I will probably just go ahead and close this thing for profit. 20% gain would be pretty sweet. Well, WWE is still hanging out above the 50. I'm probably going to pass on this one and just stop watching it. We were looking for a break below the 50 to sell this, but doesn't look like we're getting that. If it does break above the 200 right here, I believe that I will just stop watching this one, be done with it. As I've mentioned before, I'm recording this video on Tuesday afternoon, and it's well after 4 p.m. New York time, so the market is closed. Sapiens International Corp, or SPNS, looks like a great setup right here. It's got a ranking of 4 on the app, and the price kind of stalled today right here at the 50. We are looking for a push and a close above the 50 to buy this. Taking the dream trades is simple, but it requires a little bit of analysis. Just about 30 minutes before the market closes, or about 3:30 p.m. New York time, take a look at the charts for all the calls in the Dream Trades app and find the ones that have been trending in the correct direction. Also, you want to see a spike in volume on the breaking candle. For a buy, look for a candle close above the 50 SMI. Then your stop loss will be 90% of the entry price, and your first target will be 105% of the entry price. If the price starts going sideways, we'll close it and move on, which will allow us to use the equity on something that's actually moving. When the price hits our first target, we'll move our stop loss up to break even. Then each time the price moves an additional 5% in our direction, we'll move our stop loss up 5%. So it will always be 5 to 10% behind the current price. And that's our dream trade for this week. If you want more information about dream trades, just click the link below in the description box. And remember to come back Friday for my strategy of the week and next Monday for my trade pick. And don't miss the next installment of the Trading Education series next Wednesday when we'll discuss chart patterns. My videos come out at 3 p.m. New York time on those days. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great hump day, and I'll see you Friday.